In the reselling business, you always need to organize your inventory, but you also need to organize your revenue and your money. In this video, I'm going to show you how we do that. Hey, this is Mark from Shellmark Sales again. I'm a full-time reseller on eBay and Etsy. So today, I'm going to talk to you about how we organize our money or revenue that comes into our reselling business. When we first started doing reselling, we weren't selling a lot or paying a lot of expenses. I was working another job and doing it part-time, so we didn't have a lot of the interaction with the money. It was kind of put together, and we kind of knew what we sold. Hey, we sold one item this week. But as we grew and we started selling 10 items, 100 items, we started getting more money coming in. We had some more bills to pay. We had to figure out, how much money did we have in the account to pay for the bills, or can we buy this inventory? Do we have the money there to do that? Stuff like that. And looking into the bucket of money, it kind of looked like this. Just a lot. What's in here? How much we got in here? The questions were always there. So we've gotten even bigger. So I came up with a strategy to organize the money like I organized the inventory. If you watched our other videos, you'll see how I came up with that. So I used that for the most important thing we do this for, the money. What I looked for is I needed to have an operating expense account that I could have eBay, Etsy, PayPal, everybody linked to and have a debit card to, connected. Then I needed to have a spot where I knew I had money to buy inventory. If I go to an auction, how much money in my budget do I have for that? Then I pay taxes. I have bigger payments I do once a year, and I need to put money away for that every month. How much is that? So I needed a tax account. And then anything that didn't fall into operating expense, the inventory account, or the tax account, I needed a place to put that extra surplus. So I call that one surplus. So we got 4 accounts. So I said, okay, this is what I need. So I went to the bank and I talked to the lady there that I usually deal with, and I told her I needed 4 checking accounts. She said, what? Well, after we talked it out, she understood what I was trying to do, and she said, that sounds like a great idea. So she worked it up. I got 4 business checking accounts from the bank. So by getting 4 accounts, in my head, the way I think, I'm going to be able to separate and answer all those questions I used to think about in one big mess into 4 different areas. So now let's go through each of the accounts, and then at the end of the video, let's go through the pros and cons of doing it, what I see with us doing this. So the first account I set up is called operating expense. This is to pay the bills. This is where Etsy, eBay, PayPal, Pirate Ship, all of those things you use as a reseller are connected to. Now, Pirate Ship is connected to a debit card. I have a debit card that's connected to this account. So if I'm out there buying something or whatever, I use my debit card that's pointed to this account. There's limits set on this account at the bank. I also don't keep a lot of money in here. I keep enough to pay the bills, and if I need to buy something or whatever like that, I know what I got in there. Now, if I need more money in there, I just go to my phone and I transfer it from the other account, surplus, and I can put money in that account in seconds while I'm doing it. So it's an internal transfer to the bank, so it's not that big of a deal. But I wanted to limit and only have people connected to one account. So all the sales come in one account, all the bills are paid out of one account. So that's what the operating expense account is for. And every month, at the beginning of the month, I always make sure what the bills are for the month that are coming up, I make sure there's enough money in that account. The next one, as you see, it's building up. The next one is called cost of goods sold. I did that as just abbreviated. It's easier than saying inventory. But at the end of every month, we calculate the cost of goods sold, and we take that money and we transfer it from operating expense into this account. So if I sold, $4,000 worth of goods this month, then at the end of the month, $4,000 gets put in there to buy more inventory. This account can build up. If you're not buying a lot, you're going to have more money in here. And that's fine. It's always good to have more. But, you can do it's your money, you can do what you want, but that's how we do it. So if I sell $1,000 worth of cost of goods sold at the end of the month, we put $1,000 in there. Now if I go to an auction and I got to pay $1,500, but I only got $1,000 in here, hey, it's my money. I'll pull it from surplus to buy that good deal that I know I'm going to make money on. But I also know that surplus, I want to stay within the budget of the inventory. So, but sometimes things happen and you just adjust to that type of deal. The next one is the untouchable account, I call it. At the end of the month, we pay taxes. I'm licensed in 2 different states. I have insurance. I have some other things outside the business, wholesale and pre-orders that I have to pay. Those are bigger bills. And some of them memberships and subscriptions and different things I pay once a year. I break it down, I add all those up for the year, and I divide it by 12 and say, okay, I need to put $150 a month into this account above what my tax obligations are for the month. So at the end of the month, we figure out our taxes as well, and we put that in this account. So when taxes come due, I have that money set aside. When the big insurance bill comes in, I have that money set aside. I move that money to the operating expense, I pay the bill, and then I just keep putting that $150 in there every month. Whatever number it comes up to me, just take all your fixed money, your bills, for the year, divide it by 12, that's what I put in there. And I call it untouchable. That means it's money already spent. An emergency, if I need to do something, yeah, the money's there, but I know that money is there, and I try not to touch that at all. So that's an untouchable account. And there's no other debit cards or Etsy, eBay, or PayPal. No one has access to this account, just me and the bank. The last one is the surplus. Once you put everything in operating expense, you fill up your inventory, your cost of goods sold account, you put your tax money and your larger bill money in there. Whatever's left over, I needed a place to put the extra money in, and that's the surplus. So surplus can really grow over time if you're selling a lot, and it's nice to have that cushion. This is where you can take draws out for yourself, etc. But there's no debit card, and nobody's linked to this account either. So now, going from this mess, we're gonna put each one into a nice little category that's easier to manage. So I wanted to get away from this to get 2 separate buckets so I know what I have, and it makes it just life a lot easier when I'm dealing with money. So the pros and cons about this is money is organized in separate buckets. That's a pro. At a glance, I know what money I have in what account to make decisions on. That's a pro. I'm managing my money. The money's not managing me. So that's a big thing for me, is I'm managing my business. I know my numbers. I know how much money I want. So like January, every year January is a real huge time that I pay a lot of the yearly bills in. So I know that I don't buy a lot of other expenses in January, knowing that, but I also know for my bigger bills, I have that money already set aside from last year for every month. So I'm managing the money now, and it's not managing us. All the vendors and cards, etc., are linked to only one account, so I know who has access to what. Now, one of the the only con I can really think of it in my head, and you guys probably have other cons, is there's going to be a higher cost per account at the bank. There'll be for 4 accounts. My bank, say they charge me $5 an account, that's $20 a month. I'm fine with that. To make it easier and organize my money, I'm good with $20 a month for my most important asset in my company, in my business. So that's how I manage the money. It takes the guesswork out of it. It's made it a lot easier. I've run about 1.5 years now with these 4 accounts, and it's worked very well for us. And so we got the operating expense, we got our inventory, we got our tax and larger bills, and then all the rest goes in the bottom in surplus. So not everybody's gonna get something out of this video, but if there's just one piece that you can get out of this video and spur an idea on how you want to make your business better, that's what we do this for. just leave it in the comments if you have any questions. I know there's a lot of information about financials when you get into there. Just ask the question. I'll see if I can answer it, and everybody can see it. So we thank you for watching and appreciate it.